Hello everyone, welcome to the market snapshots for today. Today I want to begin with saying cash is a position. I think it's very important we realize that a lot of people feel by being in the market, that is what helps us and that is what helps our overall returns. But I think people who perform the best in the markets, they somehow they outperform rest of the world while the markets become bad. They somehow, it's not that people outperform by, making out monumental gains in the market, but somehow everyone makes similar kind of gains. It is just that during bad phases, there are people who realize that this is the time I want to be in a cash. And that is what, they affects the overall performance. So looking at how the markets are, I would say cash is the position. And throughout the month, if you have been following me, you would realize I have been telling the data is not giving any confidence. Whichever market it is, the US markets, the Indian markets, somehow, it has been a tug of war, a lot of mixed bags. Like we were never getting clear solutions, and that is how it is. And the markets have been all mixed bag. And if we look at the numbers today, so Nifty 50 is down by almost 2.12% at 23,880. Nifty 500 is at 22,908, down by almost 2%. Nasdaq, like Nasdaq is a world of its own. Like, I mean, literally it's an economy in its own. So they do different things, and I'm not surprised if they are up, because literally you cannot compare world's any indexes with Nasdaq. It's a very different beast or animal. It has its own functionings, its own symmetries. Looking at S&P 500, the broader index is down by 0.28% at 7482. I'll explain you why I'm saying cash is a position, although the US numbers are not looking so bad, but then still I would like you tell you even in the US markets you should be in cash. Let's look at the advances to decline. Advances to decline in the US, in the Indian market, this is Nifty 500 is 72,430, very poor numbers. New highs, two new highs against 498 new lows. Uh, this is the breadth. If you look at the breadth, what is happening here, we have 196 stocks above 20 EMA, 221 above 50 EMA, and 233 above 200 EMA. So basically, yesterday the breadth had crashed by 5%, the day before yesterday, and today it has crashed by almost 10-12%. See, I think yesterday also I highlighted this. If the participation is crashing by those numbers, maybe I'll not be surprised. That is part of the game. The markets go up and down, they will keep moving. But you know 10% stocks going down 20 ma in a day, that's alarming. That's not market telling you it is not doing well. Market is screaming at you that it is not doing well, and we need to take those things into considerations, to be a participant in the market. Because see, this game is overall about surviving in the market. The longer you play, the better you will become. And somehow, if you just keep losing, I mean, see, just imagine how bad it is, how difficult it is if you, like, you made maybe 30% gain and you gave away 80% of it. It takes almost 3-4 of the total times, to regain back your 30%. So it is important we realize these factors and act upon them. Let's look at the chart. This is Nifty 50. So in Nifty 50, what Nifty 50 is saying is whatever gains you might have made in last 1 month, you have given it back to the markets. And that is what I am saying. See, it is not only about being able to, ride this trend and make a lot of money, but it is also about, to know when to cut down so that you don't lose upon what you have already made. Nifty 500 is still better looking than Nifty 50. Nifty 50, I think, like, I mean, today would be an important day for Nifty 50, but this chart still looks much better than that. If we look at the overall how market is doing. Nifty 50, both, like both the indexes are above 50 MA, so they both are bullish. The participation has become very weak. Like we are having participation of almost 20%, 18% in respective indexes, and the breadth has become mixed for Nifty 50 and weak for Nifty 500. And that is the reason I am saying cash is definitely going to be a position. This is the US market, much better than what India is doing. And I think this I had already highlighted yesterday that, if I look at last 10, 12 trading sessions, almost 2 weeks, it is the US market. Globally, basically, there are a lot of turmoils, but then it is US market which is still doing much better. And we can see in the numbers also, this is S&P 500. The advances are 110 to declines of 390. New highs 3 against 497. And the breadth the breadth in the US market yesterday has collapsed by almost 15%. Trust me, this is alarming. You got to, I mean, when I began this video, I told you, like, I'll be telling you why cash is a position. 15% of breadth cannot be crashing. That's not, I mean, although if when we will look at the charts, Russell 2000 will be above 50, 20 MA, Nasdaq will be above 20 MA, S&P 500 will be above 20 MA. See, because that's the rise the market has taken, it will take some time to go down. So just barely, trusting the EMAs might not be help, but this is a better data which tells you 15% crash. I mean, see, the thing is, you and me cannot move such quantitative numbers. Very, very big players have done that to make that kind of damage, and we need to follow them. As simple as that. There is no point being a hero in this kind of market. Get into cash the moment the market resumes, get back into the market. That is how it should be played. And if we look at the numbers, above 20 MA, 248 stocks, above 50 MA, 272 stocks, above 200 EMA, 276 stocks. Remember this, the breadth has collapsed by almost 15% in yesterday's session. Look at the chart. Like I said, it's a good looking chart. Uh, Trusting the 50 EMA, trying to, I mean, it is a bullish looking chart. It is just that it has now got into a range, and but it's still, you know, not crashing down. But the numbers are not supporting. That's what I'm trying to tell you. S&P 500, very similar story, good looking chart. And here I think the participation and breadth is much better than any other index at this point of time. So maybe, like, if you're very adventurous, this is where you can try your luck. And this is Russell 2000. Again, like, a positive looking chart. I mean, somehow it was consolidating around the highest level. Now it has gone down a bit, but then overall good looking chart, but not supported by its numbers, which is participation and breadth. So let's look at the summary of the US market. Nasdaq 100 is bullish, above 50 MA, participation is weak and breadth is mixed. S&P 500 bullish, participation is weak and the breadth is mixed. Russell 2000 bullish, participation weak and the breadth is also weak. Overall, I think for me, cash is the position. I don't want to make a different stand there, but then if at all you are definitely willing to take certain bets, it has to be certain S&P 500, because there at least the numbers somehow are a little better than rest of the indexes. This is what is causing majority of its problem. A rising yield, not good for equities. Rising dollar, even bad for equities. VIX has also started rising a bit, I guess. Means almost it is up by 15-16% since yesterday. Bitcoin, I told you, like, it is the most sensitive or the most reactive indicator if you want to understand the sentiments of the market. It has gone down by almost 3000 points ever since this crash has started, and gold is at 4077. Not much movement there. Let's look at the charts. Dollar, a strong looking dollar. I mean, for me it's a very bullish chart, and this is what is causing majority of the problems in the equity markets globally. A rising dollar is not good even for the US market itself, or leave about rest of the world. The best indicator, I mean, people keep looking for indicators. I think this is your best indicator to understand the sentiments of the market. A Bitcoin rising basically means there's liquidity influx in the market. People are trusting whatever you buy mostly will go up. And if Bitcoin is going down, you need to understand the investment sentiments are not positive. People are not ready to take risky bets, and that is why. And see, that is what is happening. Sentiments were becoming positive, you know, Bitcoin rose, and now somehow things are not looking good. It has immediately reacted. You like, there is no guessing here. The first thing people do is the moment they feel the markets are doing well, they'll put in a lot of uh, their investments in Bitcoin. The moment they feel no, there is something which is sketchy, let me get out of here, they just get out. So this is your best indicator. You need not literally find any indicator to trust or understand the markets. This is gold. Again, it also tried to rise, but then it is going down. See, please understand what I'm trying to tell you is neither risky bets like Bitcoin are working, nor like safe havens like gold are working. So this is a clear indication the market itself, or maybe a high net worth individuals are not trusting the current sentiments of market, and hence we are not getting clear directions. That itself tells us that we should not be betting very aggressively. Now second bit is, leave about betting aggressively. The data is not telling us to be a participant at this point of time. So my overall takeaway for today's market would be, cash should be your position for sure. There is no doubt about it. If at all you want to trade, I think from a stocks perspective it has to be S&P 500. And if you want to take certain swing positions or intraday position, that could be your Bitcoin or gold. So those are your opportunities. Don't be adventurous. Preserve your capital. Survival is the game. That's everything from my side. Hope you all found this useful. Thank you so much and see you next time. Have a good one.